Well, welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. At Investor in the Family Radio, we believe that you can become a great investor. How? By building the right plan and then sticking to it. According to Warren Buffett, that's what it takes to set yourself apart from the rest of the crowd, and everything we do here is meant to help you get there, so thanks for joining us. And you can always find more at investorinthefamily.com and subscribe to the podcast at iTunes, Stitcher, and the Google Play Store. And if you'd like to join me on the path to becoming an intelligent investor, simply text the word JOIN FAMILY. That's one word, JOIN FAMILY, to the number 44222, or visit investorinthefamily.com and sign up. And we'll be sure to get you taken care of so you don't miss a thing as we work to become better investors together. And on today's show, we're going to be going through Barron's magazine, the Up and Down Wall Street column by Randall Forsyth. And this week's column is entitled, Everything's Going to Go Right. So you can kind of get a hint at what Randall is going to talk about this week in terms of the extreme optimism in the markets at the present. So we're talking through the Up and Down Wall Street column, from Barron's magazine this week. I'll also talk a little bit about some points from The Economist as well, and a few other things that I've been reading. And so without any further ado, let's jump into this week's update. So the Bank for International Settlements, which is something that most of us probably don't hear a lot about, it's basically the central bank for central banks, which sounds really high-level world domination type secret society stuff to me, in my opinion. So whatever that means, the central bank for central banks posed the question in their quarterly report recently, a paradigm shift in the markets, ? Which I think is supposed to be a little bit tongue-in-cheek, as the U.S. elections have produced big changes in the markets based on expectations of strong growth in the economy and corporate profits and higher inflation. So again, as a result of the U.S. elections in November, most significantly the election of Donald Trump, there's significant expectations of big changes in terms of strong growth in the U.S. economy, corporate profits, and higher inflation. Again, all expectations. Now, the problem, again, as I just said, is that expectations are so strong, they border on certainty. So they're assuming that basically all of the positive platforms that Trump put forth will be enacted as he presented them and immediately upon him going in the office, which obviously that likelihood of any of that happening is very, very low, regardless of intentions. Most market participants seem to be expecting, or most market analysts making projections about next year are predicting GDP growth in the U.S. to be about 2% after inflation, and interest rates as measured by the 10-year Treasury note to be around 3%, up from around 2.5%. And U.S. stocks should return in the single-digit percent range. That seems to be the almost consensus expectations for next year. And really doesn't seem to be a very wide range in that consensus. It's not like you have really high extreme highs and lows, but a lot of people seem to be in a very tight range in terms of their expectations. And this has led to, according to the article, sage market observers, I'm doing air quotes, sage market observers. I'm not saying they're not great, but it's just kind of a funny way to refer to someone. David Rosenberg and Doug Kass, some of you may recognize those names, and they are very well-known names in the investing world. So both of these guys, they've invoked rule number 3 of Bob Farrell, and Bob Farrell is a legendary, supposedly legendary Merrill Lynch former market guru of Merrill Lynch. And I meant to look up his rules before this podcast. I could talk about more about them because that really intrigued me. Someone who's referred to as a legendary former market guru. The word guru doesn't help, but otherwise sounds like he's someone who's very respected and knows a lot about what he's doing. So if he's got rules that are really famous, I want to know what they are. But apparently rule number 9 is that when all forecasters and experts agree, something else is going to happen. So basically, it's the ultimate contrarian idea. If everyone's saying X will happen, then assume B will happen. So with that being the case, what else is there evidence of things being extreme? So let's see. The VIX, which measures risk, is hovering near lows for the year, which again is showing extreme high level, significantly high levels of optimism, because people are not putting too much value on risk at present, which historically is probably a good reason to expect risk. And this serene confidence is also evident in the high-yield bond market, where investors are not asking for much for the risk that they're bearing. So basically, in the high-yield bond market, high-yield bonds are considered much riskier bonds, but investors aren't asking for much in return for the risk that they're bearing in with these bonds. It's basically half that of what it was last February. So again, that's the idea that people are not factoring very highly in the fact that bad things could happen, which again is usually a reason to prepare for the potentiality of bad things. It doesn't mean bad things will happen, but it's, again, usually when a sentiment gets really extreme in one area, it's really wise to position yourselves in preparation for the opposite to happen, because that's just kind of how things historically go. So basically some consensus assumptions that are taking place out there in the markets. One is that Trump will follow through on some, let's see, it's kind of mentioned this a little bit earlier. Trump will follow through on some of his plans on day one. So basically some of the plans that he's put out in his platform during the campaign, as well as since becoming elected as president. So some people are saying, like, well, not only is he going to do it, but it's going to happen immediately. For example, declaring China a currency manipulator. Some people think he may do that. That could happen right away once he takes office. And a technical note here, I don't want to get into all the details of this because honestly, I need to look into them more in depth to speak on it with a little more authority. And until then, I don't want to speak on it with too much detail. But apparently there are 4 criteria that the U.S. has that must be met before someone can be declared a currency manipulator. And apparently China does not meet those criteria. So whether President-elect Donald Trump wants to declare them a currency manipulator, according to the criteria that is officially set, they do not meet that standard. Whether some of you may, I'll go back to a podcast I did a few weeks ago when we talked about the idea of post-truth, which was the word of the year according to Oxford Dictionary, which again is funny because it's 2 words hyphenated. But either way, the idea of post-truth is that people don't really care about the truth, because it's the idea that people don't trust anymore. And so people can be easily swayed by what they believe to be emotionally convincing arguments, or basically when people say things that you want them to believe and want to be true. And it kind of has a contrarian idea to it also, in the fact that you just assume that the status quo or the powers that be are lying to you. And I think it's a very real thing that is out there, because the reality is the powers that be do lie a lot, and they have lied a lot. And so you get to this place of, well, who do you trust anymore? And so I'm sure some of you may hear this idea of there being 4 criteria that must be met in order for someone to be a currency manipulator. And you may be thinking, yeah, well, what about XYZ? And I'm sure that's part of the conspiracy. That's the problem with conspiracy theory, is that you can negate any argument because you just say they're lying. And there's not much you can do to respond to that. So all that being said, President-elect Trump may say that China is a currency manipulator. And but it doesn't seem, while I have no faith or confidence in China or their character as a government, there's Chinese people, there's a lot of great people, obviously, but as from a government level, I am not going to place any high level of trust there per se. But just to back up that argument about them not really being currency manipulating, at least at present, is the fact that China has actually been liquidating foreign assets in an attempt to stabilize their currency, the yuan. One of the ideas with currency manipulation is that a nation will try to be either lower the value of the currency or keep it low, or otherwise as a means of trying to boost their ability to export goods. But China has actually been liquidating foreign assets. I've talked about this in several podcasts previously, in an attempt to stabilize the yuan, because basically the yuan is dropping in value and China doesn't want it to be. Beijing is taking clear actions trying to combat this and struggling to do so. And so that's important to keep in mind. And China has really been experiencing what you could kind of describe essentially as a bank run, as individuals in China are trying to move money overseas out of China. I think there's a limit of like $50,000 or something. And people are trying to get money out of the country because of concerns over stability with their currency and just overall credit concerns and just a lot of things going on credit-wise and economically and market-wise in China that have people, I'll say, cautious. to say the least. And but a part of one concern is that if this whole idea of a trade war with China, and again, it's something we've talked about in previous weeks. So if the U.S. comes out, or President-elect Trump comes out and declares China a currency manipulator, that just kind of fans the flame of concerns and tensions between the two countries. Again, I'm not saying it's right or it's wrong. I'm just saying it's true, that does raise concerns and tensions. And there are concerns that could lead to some kind of confrontation in the South China Sea as a kind of a way to test the Trump administration, to see how serious he is about some things that he said regarding China. And some of you may be familiar with the South China Sea. There's several places in the South China Sea, in that area, where you've got, and I'm not going to get all the details right on this because I don't have the information in front of me. So if someone has the details exactly right and I get them wrong, I thank you for the grace. But I know that there are islands that China, Japan, and I want to say, I don't know if it'd be Korea or the Philippines, but I know China and Japan, definitely there's contention over ownership of some islands. And that's kind of like, there's been a big kind of political chess match over what is happening and will happen there. And so people think that China may kind of exert some power there to see how the U.S. responds. Because basically, if the U.S. doesn't respond, then that basically tells China and everyone in East Asia and that part of the Pacific that, hey, the U.S. is not going to be involved here. So China is now the big brother, and that China has the ability, they're going to be able to do what they want because the U.S. isn't going to stand up. Kind of, and I'm going to tip my hat to what I'm going to say in a few minutes toward the end of the podcast, the situation in Syria, with the lack of the West, specifically, I'm going to point to the U.S. not stepping in regarding Aleppo and Syria in any kind of tangible way, and leaving a vacuum in that area has allowed Russia and Iran to fill that vacuum. And I think that has been not a good thing, which may sound like Captain Obvious. But so basically, we've left a vacuum in the Middle East, specifically with Syria, and that vacuum has been filled by Russia and Iran. And that will always be the case. Whenever a vacuum happens, it gets filled by someone else. And I think there were some overly optimistic assumptions with Syria that, hey, if the U.S. is not a major military player here, maybe the global community will step up. Well, they didn't. And I think, and that's one of the concerns in the Pacific, East Asia area, that if China kind of tests things in the South China Sea, and if the U.S. does not respond in some show of strength, whatever that may be, then that's going to communicate, a power vacuum, and that China will gladly fill that vacuum there. So, and again, those are overall bigger concerns with the themes of protectionism that are growing stronger here in the U.S., that if we start looking out for quote-unquote number one here at home, I'm not saying that's a bad thing, and I think there are definitely reasons and areas where that is a healthy thing. But if it is too strong of a swing, that does leave significant vacuums overseas, and those vacuums will be filled. And history indicates that those vacuums will not be filled by very friendly people, at least as we determine people being friendly. And just to reinforce that a little bit, apparently last week, a Chinese warship seized an underwater survey drone used by the U.S. Navy, which sounds really random, but this is how these political games get played. And this is how someone like China will say, kind of flex their muscles a little bit by taking this survey drone of the U.S. Navy. That's not something you do if you're trying to win the affections of another political group, country. So that's all out there. So people are assuming that could happen. Trump may do that. There's also assumptions that Trump's fiscal plans will sail straight through Congress, especially his proposed tax cuts, and that very likely may not happen. There's other things going on in Congress that could cause the tax cuts to be either delayed or pushed aside, as other things like potentially Supreme Court nominations maybe get a priority treatment in Congress. There also seems to be assumption that oil prices will continue the recovery they've been experiencing of late. When in reality, it's very possible there could be another drop in prices, but markets are kind of assuming the best in all of those cases. So the bottom line is there's strong assumptions that the positives from November's elections will come to pass, and quickly. But the history of 2016 is that what was expected didn't happen, and what quote unquote couldn't happen did. So again, the theme continues. There seems to be very significant optimism in the markets, which as I want all of us here in the Investor in the family to, I believe in being a contrarian. I believe in focusing on fundamentals. I believe in not getting caught up in emotions with our investing. And emotions are high on a optimistic, bullish front, which is the way market pendulums go. When they get extreme in one area, they usually end up getting balanced out by extremes in another area. And extreme pessimism would mean negatives in the markets. And again, ultimately, it's up to you what you do regarding your portfolio in that regard. But looking at fundamentals, the markets are overvalued. And when markets are overvalued, historically speaking, and just probability-wise, is that there's a greater probability for negative things to happen than positive. And so that means there's usually good reason to have higher levels of cash, to be especially diligent in your selections in your portfolio. I actually did an interview with an investor that I highly respect today who's talking about he's not in any rush to open any new positions at present, especially in long-term positions. He made the statement that he believes that this is really a trader's market, and he's not a trader, but he just says, there's not a lot of good opportunities out there right now. So accumulating cash is a really good thing in his opinion. And I will kind of tip my hat briefly that interview was part of what will be in January in partnership with Seeking Alpha. I'm doing an online summit called the DIY Investing Summit. And I was interviewing actually Mark Barron today with that summit. I've also interviewed Krista Muth and a few others, and have an interview with Eric Parnell tomorrow for that summit, hoping to have over 20 great investors as a part of that. So I'm totally tipping my hat. I hope you'll be very intrigued and join me in that summit in January. You'll have plenty of more information coming about that in weeks to come. And so again, extreme optimism out there, and market fundamentals do not communicate there's good reason for that. Doesn't mean the markets may keep climbing. They could climb 20% from here or more. But again, we need to focus on fundamentals and not get caught up in the market, because markets are not historically very smart in terms of what they do. So again, all this suggests that we should be aware of and prepared for risks ahead. So if you're the hedging person, it could be smart to consider hedges. Or if you're a conservative person, it may not be a bad idea to accumulate some cash as well. And so just some final thoughts on this idea. I continue to believe caution is very wise at this stage. I'm not a fan of fear mongering by any means, but I think caution is wise. And I've talked about fundamentals, being careful about what you buy. I'm going through my notes here to make sure I didn't leave out any gems I don't want you to miss out on. So, it's really hard to sell when things are good, and things appear good right now, but that doesn't mean if you've got some big winners, it could be a good idea to trim and capitalize on some of that money. It can be really hard to be patient, to wait for good opportunities when it seems like you're quote unquote missing out right now. But if you feel like you're missing out, you probably aren't. And I wrestle with this with my portfolio as well. I have positions that I'm still waiting to develop. I have hopes for them, and I want to keep my activity low in my portfolio. I want to be as inactive as possible. But the markets and good judgment say caution. So I keep thinking, man, should I sell stuff? I'm still wrestling through that. So I'm not by any means trying to communicate this is some super easy judgment call. But I do believe the more rules-based and systems-based we can be as investors, typically the better results we will have. In other news, I already hit on this, so I'll just briefly touch it real quick. The Economist was talking about the fall of Aleppo this week, or in their magazine this past week. And a main point that's made is basically, as America has stepped back, the vacuum has been filled by, quote unquote, not by responsible countries for the greater good, but by countries like Russia and Iran, which are very anti-U.S. and West as a whole. And basically, by failing to stand up for what America and the West supposedly believe in, we basically showed the world that our values are just words and that we can be ignored without any consequence. And so you think, why are you talking about this on a podcast about investing? Because these global dynamics do matter, and I don't want to turn all my focus to that by any means. But there is an increasing destabilizing dynamic happening in the world that probably could be said in a more fluid way. And I think those are all reasons to be cautious. Again, not fear-mongering, but just realize that the world is not getting more stable, and the global economy is not getting better. And so just be smart out there. And let's see, the world is fracturing. Here are my final bullet points. I sound really negative. I don't mean to be. The world is fracturing. as the West looks inward to heal economies, and unsuccessfully, I might add, the bad guys, quote unquote, are filling the void globally. And this increases concerns over increasing global conflict. And again, more reasons for caution, which I've said about 1,000 times in this podcast. So anyway, that's the news for this week, things to be aware of. And again, my goal is to help bring you some of the top news, and not just headline news, but just things going on in the markets in the world that should be a factor for us as we invest. And some of you have been wondering, hey, where have been all the interview podcasts? So don't worry, I am conducting plenty of interviews right now. The thing is, I'm just stockpiling them for the DIY Investing Summit in January, which you hear plenty about. And if you want to make sure you don't miss anything regarding the news for the summit, text the word join family, one word, join family, to the number 44222, or just go to investinginfamily.com and sign up for the email list there, and it'll make sure you don't miss out on anything. And let's see, wrap things up. So that's a wrap. And remember, you can always subscribe to the show at iTunes, Stitcher, and the Google Play Store. You can always find more information at investinginfamily.com, as well as detailed show notes. And I already told you how to join the email list. So that's a wrap. This is Brian, and thanks for joining the family.
The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.